Hey guys, we're back with the weekly options update. Strap in. I got a ton of stuff to cover and things I want to go over, so this is going to be a long one. And if you like these videos, please like them, share them, comment them, because a lot of people don't know these videos are the least popular videos on my channel. I received the most unsubscriptions from these videos, so I don't mind doing these videos because it's really a big part of my channel, or a big part of me, of retiring with less, right? A lot of people, I think, have a misconception about options, that they're super risky. You're going to lose all your money. And they think, I think, in my opinion, you know, when you hear retire with less, I think people are looking for a pie in the sky. You know, I'm going to get, you know, $250,000, put it in a money market fund and never run out of money. And that's just not the case. You know, you're going to have, if you're going to retire with less, you're going to have to be creative with what you do. And this is a big part of it. So anyway, like, share, subscribe, do all that good stuff. Let's get into it. Strap on. Did I just say that? I did. Strap in and let's get going. So we're going to start off with the closing trades, and those who don't know, I go from last Wednesday to Tuesday close of this week, which is yesterday, and I share all the closes, all the opens, share the, you know, options profits or losses or rolls, whatever, right? And we're going to start with the closes this week. First thing we did on the 6th, we closed Lemonade. I had a 35 put. This was a preemptive roll. Okay, I ended up rolling this thing. We'll talk about that when we get down below. But I closed it out for $1.92 and a loss. I should have colored that in. A loss of 116.02 on that one. Had a covered call on Meta. That's the Meta ETF. Closed that for 5 cents. So profit of 19.30 on that one. Let me get rid of these fees. I always forget to do that. There we go. Makes it easier to read for me. Workhorse, I was assigned 100 shares at $4.50. So that contract expired worthless. We kept all the premium, $19.30. Overstock. Now, I did take a complete loss on this one. I did not roll it. I didn't have confidence in Overstock. Reason being, I was also in big lots, and I follow big lots a lot. And I have a feeling big lots is not going to have a good report. I don't think Christmas did them well, and I don't know if Overstock is any better. But with the weakness that we saw on Monday, just in case this thing kept running, I didn't want to re-enter a trade into this one, so I just washed it out. You know, took the loss, closed it out for $8.50, $735.72 loss there. ARKK, this is where it gets juicy, and stay tuned, because I'm going to take you actually into the Interactive Brokers account. If you're on a phone, sorry, when you're in Interactive Brokers screen, you really should be on a computer to really see what's going on. But I had a 90, it was basically, I forget what it was, because the strikes adjusted because of splits before and some dividends and special payouts or whatever. But I had a $91 basically put strike on ARKK. And on Monday, ARKK got down into the 80s, like $80.90 or something like that. So I decided to take that roll. I closed this one out for $9.62. So a loss there, $676.36. I probably lost a whole bunch of people right now because they're like, oh, this guy doesn't nothing but lose. But just hold on. So we took that loss. ARKG, I had 2 ARKGs that I closed out. One was a 55 strike. Another one was a 60 strike. Closed those out for 403 and 812 respectively, and lost 273 on that one and 527 on that one. Hold on to your hats there. Fubo, we're going to talk about those when we go over there to the open side as well. But I didn't want to hold Fubo. If anybody missed the live stream, me and Dave do a live stream from Hidden from Freedom every Sunday, and I talked about wanting to get away from individual stocks, at least the weaker stocks. And Fubo falls into that, in my opinion. So I closed it out. I didn't want to take any more possession of shares, and I actually want to sell my shares off, and you'll see what I'm talking about later. So close that for 69 cents, lost 52.29 there. STNE, that had a covered call, a 20 strike covered call. I closed for 15 cents, 17.54 profit there. Stone put, closed that one for a scratch because I didn't want to, in case it went down, I didn't want to own any more shares. $1.54 premium there. Covered call on Vizio, closed that out for 5 cents, so 25 bucks profit there. Fubo put, I had another one at $11, closed that for 70 cents for a $33 loss there. Had another covered call on Fubo at 20 bucks, closed that for 34 cents, profited 51 bucks there. I had two covered calls on Palantir at 20 and 22, closed that for 16 and 28 respectively, and profited 25, 14, and 53.68. And we got a few more. Tupperware covered call, closed that at 25 cents and profited 34.62 there. And then KWeb closed those out finally, 28 cents and 75 cents respectively, profited $44 and $263 over 32 and 25 days on them. So let's go ahead and take a look at the open positions that someone takes care of these, and then we'll go into the Interactive Brokers account and I'll show you the beauty of it sometimes and why I like to do what I do, and I'll explain that here in a second. I'm not saying that it's always going to work out this way, but it just sometimes works. So let's go back to January. Was it January 6th? January 5th. January 5th, I sold a Dutch Bros. Everybody knows I like Dutch Bros. Sold a 35 strike, got 90 bucks for that. That's a 45-day hold roughly. Did sell a Kohl's put on the 6th for 42.50 strike, collected 100 bucks on that one. Same distance, February 18th. Lemonade. Now there's that Lemonade roll. I had a $35 put that I rolled down, and I rolled it out to February 18th for a 30 and a 25 strike. So I got two contracts now down at 30 and 25. So in case it keeps dumping, I'll be able to lower my cost basis. So that is $2.22 a premium, or 222 bucks in premium. And what did we lose there? On Lemonade, we lost, where'd Lemonade go? 116.02. So we collected premium, what we lost, plus a little bit more. And that's how you run a roll. Then what do we got here? Vizio put. I sold a Vizio put. Oh, that's the Vizio. Wait. Ooh, I better look at these again. I got a Vizio put out 16 strike. Collected 55 bucks. I didn't think I would do that. Maybe I did. So that's 54 bucks. SOXL got a put out to February 25th. Got the 40 strike. Collected 165 bucks. Now here, those three stocks that I had assigned, I decided to sell essentially at the money covered calls. And I do have options here. So I sold a Fubo call at $13.50, collected 56 bucks. Palantir sold two 15.50 calls, collected 103 bucks. And Stone, I sold a 16 strike and collected 45 bucks. Now, what I might do, since these things have run up past these strikes prices, I could keep rolling these out 1 week over and collect 20 bucks, collect 30 bucks, and keep them at the same strike. And just until someone finally decides to early assign them, I could do that. And I might. I'm going to make that decision here tomorrow or Friday because these expire in 4 days. And otherwise, I'm happy with letting them go, letting the shares go and all that. It doesn't matter to me, because I would really rather have be cash heavy and go into the indexes like we talked about on the live stream. But if it's tempting enough for me to roll out another week and collect 20, 30 bucks from these, and just keep doing that? I just might. We'll see. So that's Fubu, Palantir, and Stone. Now here it gets interesting from those ARKG rolls. I rolled it out to a 53, 62, and I got $5.17 for that. Now the price of the stock at the time of rolling was, I was rolling in the money, okay? So I got $5.17 for that. Did another one for $50.62 and got $3.43 for that. And I did another one down to $39.62 and got $70 for that. So I basically got $920 roughly, and in premium, and got safer on the strikes. And if we look at the ARKGs, I lost 800. So bought back or sold that premium plus an extra $100 or so. And then the ARKKs. The ARKKs, there you go, $80.90. This is stock price, date of contract. I rolled it from that 91 put, right? That was way in the money because it was sitting at $80.90. I rolled it down to 85, rolled that one down to 85.22, collected $8.12. And I also sold a 69 put and collected $1.90. So where are we at there? We sold the ARKK and lost $676, and we sold 2 and collected 900 and almost $1,000 there. And then Lemonade, I sold a call because I have the shares as well at $45. This is right at my cost basis. Got $130 there for a 45 strike out to February 18th. So those are all the opens, closes, rolls, all that stuff. And I'm going to explain to you why I did the ARKK on Monday. There's different schools of thoughts on this, but this typically works. I don't want to say typically either. This sometimes works on a big down day. Ooh, what was that? On a big down day like we had on Monday. And if you're deep in the money, okay? So my strike on ARKK was 91, right? The stock was trading at like $80.90. I kind of guesstimated there, but that's right around where it was that day on Monday. And so let's drop you into Interactive Brokers and we'll look at that. Now, typically, when you have a big down day like that, I love to roll when we have that big down day. Why? Because typically what follows a big down day is a big up day. And maybe if you get enough momentum there, you'll have 2 big up days. So what ended up happening is if you look at it, we almost timed the bottom. I'm not going to say I planned it that way. It just happened that way. So if you look at the ARKK positions right now that we sold, there it is, 811 and 189 roughly. We're already up in one day. We've already got back $460 just in one day from this. Go back over here. We already got back $460 from this ARKK loss that we took of $676. So I really only need to cover another 200 and something dollars to cover the loss and make it a scratch. So that can literally happen in 2 days. All of a sudden, bam, you're out of the stock. And that's why I like to do them a lot of times on down days, because when you have that big up day spike, when you're rolling on a down day, a lot of times you'll get more premium than normal. And then when you get that big spike up like we had today or yesterday, it wasn't even that big. It was like a 3% move in ARKK. And here we are. We're inching right back 56% in one day, 43% the next on the other one. So that's how I like to roll my positions. A lot of people know that I got spanked in January of 2021, and I really like that happened, because it seems like January's like no good for me, but I lost big. January 2021. I'll flash a screenshot up of how much it was. It was like 16% in that month. And, I was playing willy-nilly, just pointing, clicking, and had naked calls on, was using way more account than I should have for my account size. And I got my butt handed to me. And I'm glad that happened, because it really kind of shaped the things that I do now. And, even though, I was sitting here having to take, $700 losses, $600 losses, I didn't panic. It wasn't a oh crap moment for me. It was like, okay, let's handle this. Let's see what we can do. Thankfully, this time it worked out. The bounce happened, and we are definitely a lot better. Now, obviously, the bounce could fade and go down, and we can be right back to where we were, right? So I'm not saying I call the market or I know what the heck the market's going to do, because I don't. I just manage my portfolio as needed. So with that being said, let's look at premium cooking. So we'll see how the week ended. Week ended January 11th, closed out 18 positions, opened 15, profit realized negative $1,860.72. Premium sold $2,890.59. A big portion of that are those rolls from ARKK and ARKG. Total premium cooking right now, $4,707.04. Probably the most I've ever had on at one time. Maintenance margin, a cool 21,400. Buying power usage, 17.66. Cash balance increased by about $670 from last week, so it went from 112,406 to 113,080, and that's just the new stuff that I sold plus the rolls. No deposits, no withdrawals. Net liquidation went from 123,100 to 121,200. Not bad considering. Return on maintenance margin, that is the realized profit divided by the maintenance margin used the previous week, negative 9.2%. But overall return on net liquidation, which is profit realized divided by the previous week's net liquidation value, that gives you a 1.5% fall for the week. Now, everybody's going to say, "Oh, see, you're in options, so that's why you're losing money." Listen, if I had all this money, right? If I had all this money in the market, look at this. Just say 5 days, right? Let's look at the past 5 days. I'm down 1.5%. Let's look at the Russell 2000, 5 days, down 3.4%. NASDAQ, past 5 days, down 2.6%. I think the S&P is better. Oh, down 1.6%. So, you need to learn how to manage these times, because these times are coming. Every option trader needs to learn how to deal with their emotions, because if I look back to January 2021, I panicked. I literally panicked. I had no idea what I was doing. The November 2020 and December 2020, I made 15% on my money in the market, trading options. And I thought I was unstoppable. And January comes around, boom, wipes it all out. But I didn't know, I didn't know what I was doing, essentially. So now emotions really play a part in what you're doing here. And you really need to rein that in and see what feels comfortable for you. If this doesn't feel comfortable for you, losing $1,800 in a week, dependent upon your account size, if you got an account size at 120,000 and you're not comfortable losing anything, you may not want to be in the market or options, right? So we're going to have days like this. We're going to have times like this. We're going to not always win. I don't know what else to say. Down 1.5%. I'm very satisfied with that, considering where the market's at. Like I said, oh, one other thing I wanted to point out, notational value. So everything on there, if we're to put to me all my options, all the rolls, everything, $108,530. So my cash balance covers the notational value that I'm holding right now. So not using margin, not being risky. It's not going to, vaporize my account. If everything was put to me, I would have to spend $108,530 today or when they expire. So I think I got it all out. Let's see how many unsubscribers I get from this one. If you enjoyed, like, share, subscribe, leave me a comment down below. And you guys have a great week of trading, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.